Okay, everybody, why don't we get started? Welcome. Again, I'm Adam Dakin, Managing Director of Dreamit Healthtech. Thank you so much for taking time to learn more about Dreamit on a Friday afternoon in the summertime. I'm here with Ethan Werdelis Isaacson, Program Manager for Dreamit Healthtech. So we'll take about 20 minutes or so to give you an overview of Dreamit. We'll reserve a little bit of time on the end for question and answers. So let's get going. A little bit of backgrounds on myself and Ethan. Ethan spent 6 years working for a large enterprise healthcare system, focusing on marketing, network level project implementation, and service line expansion. He also co-founded a B2C marketplace startup, along with a nonprofit organization that currently raises about $1 million every year. My background, my entire career has been focused on starting and building health tech companies. I co-founded 5 companies, served as CEO of 3 of those. Collectively, those 5 companies raised over $60 million of early stage venture money. Some went well, some did not. I love helping startups and working with entrepreneurs. So let's tell you a little bit about Dreamit, who we are and how we're different. So most people think of Dreamit as an accelerator, but we are very different from traditional accelerators. I prefer to describe us more as a sleeves-up venture fund that runs a growth program alongside of our fund. Our target companies tend to be later stage startups that are in market and focused on scaling. More on what we look for in a minute. I also want to emphasize there's no co-location, and the vast majority of our program is conducted remotely. Where we're really different is our business model. It is not based on making a small investment for a large amount of upfront equity. Rather, we generate returns by investing in companies that go through our program, and we only invest in those companies. As a result, we are super selective. We run 2 cohorts per year with 8 to 10 companies per cohort. The entire mission of the program is to add significant value to each and every company by accelerating customer acquisition and access to capital. We do this via customer and investor sprints, which I will describe shortly. Based on that business model that I just described to you, our interests and yours are extremely well aligned. At the end of the day, we succeed if you raise capital, we invest, you scale, and in turn increase the value of your equity. Since we typically work with less than 10 companies per cycle, we deliver a very individualized, highly curated program that is laser focused on accelerating your success. We are proud of our track record and our portfolio. We've helped over 300 startups during the last 10 years. The 3 programs you see on the left side of the screen, health tech, urban tech, and secure tech, are our currently active verticals. We've had other verticals in prior years. If you look on the far left, that's the health tech vertical, obviously what we're talking about today. You can see logos of 5 of the companies that have gone through the program. You probably know some of these companies: Redox, Tissue Analytics, Wealth. These companies have all raised capital and are all scaling. Health is our longest standing vertical. We've helped accelerate over 120 health tech startups. We know the space, and we've built a very extensive stakeholder network. Probably the most critical KPI on this slide from your perspective is the one in the bottom middle. Over half of our companies raise an institutional round within 6 months of completing the program. So what do we look for, and what do we mean by health tech? We look for companies that are either in the med tech, digital health, or diagnostics. These are sectors where we feel we can add the most value. We do not do drug discovery, life sciences, or biotech. In general, these companies are targeting providers, payers, big pharma, and thereby leveraging our customer network. It's worth noting that we will go slightly earlier in the med tech space, including pre-FDA clearance, because we feel there can be meaningful de-risking prior to having actual customers. Drill down a little bit more on specifically what we're looking for. Well, this stuff's all very cliche. I'm sure you've heard it many times. It is the same stuff. We want a big market. We want a great team, differentiated, scalable, and scalable platform, all stuff that you probably already know. I will sort of emphasize that if you happen to be a digital health platform, differentiation is really key, and it's likely one of your largest challenges. So as an aside, be sure to emphasize this differentiation at the very front of your pitch deck. We do require that entering companies have at least 6 months of runway. Obviously, we want to make sure that you're funded through the program with enough time to raise your next round. We touched on this a little bit stage-wise. Our companies do tend to be more later stage startups with demonstrated product market fit, with referenceable customers. They are truly ready to scale and have line of sight to an institutional funding. That last criteria is really essential because remember, our returns as a fund depend on co-investing in Dreamit companies. To be clear, we're not a traditional arm's length investor as we only invest in companies that go through our program. There are really 3 key program pillars: customer sprints, investor sprints, and coaching. I'm going to drill down on customer and investor sprints in a moment. I do want to emphasize that coaching and pressure testing from domain experts are a big part of our program, and I think that tends to be underappreciated when a company is actually, until a company is actually in the program. Our team has extensive operational and fundraising experience. We bring a lot of pattern recognition. We know what investors are looking for. We're like a heat-seeking missile that identifies and targets areas of weaknesses. And for example, we frequently spend time refining go-to-markets, market sizing, and pricing, among other aspects of a business plan. You will be game ready and your pitch will be tight before we stand you up in front of our customer and investor network. Customers and VCs tell us consistently that they are impressed not only by the caliber of the companies, but also by the fact that the pitches are crisp and well rehearsed. Customer sprints. So getting in front of the right decision makers is a huge challenge for any startup. During customer sprints, we spend 2 weeks in the middle of the program visiting multiple cities and meeting with C-level and senior level decision makers who know we are bringing them the best startups that are solving big and urgent problems that they care about. We are routinely slicing 6 to 9 months off the front end of the sales cycle. In a recent cohort, one of the companies signed a multi-year, multi-$100,000 contract exactly 6 months and 9 days after the customer sprint meeting as a direct result of having the chief innovation officer in the room. Last cycle, we held 23 customer sprint meetings. And on the screen, you can see the logos of several of the organizations that have been kind enough to support and participate in our customer sprints. Investor sprints, and I'll drill down on the schedule, the detailed schedule in a moment, but investor sprints happen during the final 2 weeks of the program. Again, we are all about helping companies raise capital because we want the opportunity, first and foremost, we want the opportunity to invest in your company. We reach out to over 1,000 venture capitalists who know Dreamit companies have been carefully vetted and are worth considering. The investor sprint consists of 2 weeks of bi-coastal meetings, East Coast, West Coast, with funds that specifically request to meet with your company. Last cycle, companies had an average of 25 face-to-face meetings with venture funds. I should mention that the investor sprint can be deferred. For example, you're coming into Dreamit, you are just about to close a round, and you may want to preserve this option for a future round. That is totally fine with us. And again, the KPI for us that's important, over 50% of our companies close an institutional round of funding within 6 months, and then we co-invest in the vast majority of those. What is the offer? So here's how Dreamit gets compensated. We get an investment right to put up to $500,000 into your most recent or upcoming round on the same terms and conditions as those investors. We also get $150,000 of advisors' equity, which is valued at your most recent, or if you have a round that's about to close, an upcoming round, it will be valued at the same as that upcoming round. Of note, we do occasionally take companies that are a bit earlier than what I described, and in those cases, we will sometimes restructure the offer to make it more stage appropriate. So again, personally, as a former founder and entrepreneur, I really like this structure because I feel like it really aligns our interests. We only succeed if we invest and your equity value grows. Here's an overview of the actual program schedule. It's 14 weeks in total, but only 5 of those weeks require team members to be physically present. That's the 1 week in the beginning that we call the kickoff week. You can see here in the middle, customer sprints, which are 2 weeks in the middle of the program, and then the final 2 weeks of the program are the investor sprints. So in total, 14 weeks, but 9 of those 14 weeks are actually done remotely. Key dates that you should be aware of. Applications for the next cycle for the fall cohort will close on August 3rd. However, I strongly encourage you not to wait until August 3rd if you're interested in applying to our program. We are actively interviewing companies right now. Every day we are making offers. So again, the sooner you get your application in, really the better. So running through this schedule, kickoff week is September 9th. Customer sprints in the middle of the program start October 14th through the 25th. That will require travel. And then the final 2 weeks of the program are the investor sprints. Those happen from December 3rd to 13th for this cohort. Apply.dreamit.com is the link to the actual application. As far as these dates go, I want to emphasize we are very entrepreneur friendly. We know you're busy running a business and supporting customers. We are always more than willing to address scheduling challenges and conflicts. Also want to mention the application itself is a very light lift, especially if you already have a robust pitch deck. I encourage you to follow us on LinkedIn, Twitter, and YouTube. We push out a lot of content specifically designed for helping startups. I've recently published several articles on MedCity News, and we've actually recently released a video describing the kickoff week in detail. You can link to that from our website or subscribe to our channel on YouTube. Later today, we'll be releasing a video that includes interviews from recent Dreamit alumni. So again, I really encourage you to apply. If you're in doubt, you think you might be a little bit on the early side, I encourage you to go ahead and apply. It's great. Even if you're a bit on the early side, it's great for us to get to know you. It's great for you to get to know us. We have had companies that the third time was a charm. They were just too early, their first 2 applications, but by the time the third application was made, they were a great fit. So with that, we'll open it up to some Q&A. I think Charles is going to share some of the questions with us. and we'll spend a couple of minutes addressing any questions or concerns that all of you may have.
Awesome. First question, from a company that's a hybrid B2B and B2C company, do you work with B2B and B2C companies, or are you just looking for B2B companies?
Yeah, that's a good question. So the truth is we skew heavily towards B2B companies because, as you saw from the slides, that our stakeholder network really is comprised of payers, providers, big pharma partners, large multinationals, and so it only makes the most sense for you if we can provide a lot of value. The truth is, if your go-to-market really is focused on B2C, we probably can't add as much value as we like. If it's a hybrid and a very significant component of your go-to-market is B2B or enterprise sales, then you certainly could be a good fit for our program.
Next question from Thomas. His startup is based in Denmark. Can you talk about the policy of where you accept startups from, whether that's United States or international? What kind locations of startups are a good fit for the Dreamit program?
Yeah, good. I'm glad that you asked that, Thomas. Thank you. So geographically, we are totally agnostic. We just look for the best med tech, digital health, and diagnostics companies across the world. So we have worked with companies from Israel. We have worked with companies from Europe. Often those international companies are really looking to penetrate the US market and looking to accelerate their US go-to-markets. So we're certainly enthusiastic about international companies. I will tell you that you will have to have a US corporation. Israel is an exception just for legal reasons, but there will have to be a US entity. You'll actually find that is the case for any US venture investor. The vast majority of US venture funds are prohibited from investing in companies that don't have a US entity. So most of the international companies already have a Delaware C Corp, and which solves that problem.
Next question is about the financial structure. So when we work with startups, what is the, can you talk a little bit about the 150K advisor equity? Do you take that equity even if you don't invest in the next round? And what do you look for to make that investment in the next round of funding?
Yeah, good question. And I should clarify, no cash actually changes hands. So we're getting $150,000 of advisor equity in the current or the most recent round. And in terms of the additional investment, again, all the same stuff that sort of traditional investors look for, but the truth is we get to know the companies pretty well during the Dreamit program. That of course informs our investment decision, but predominantly we're looking for a lead institutional investor, because Dreamit will not be the lead, we will not set terms, we will not take board seats. But we will work like mad during those investor sprints to help you find a lead institutional investor, because at the end of the day, we want to invest alongside of that lead institutional investor.
All right. Let's see. From Timothy, his startup is developing cancer detecting clothing. It's a wearable technology. And he is wondering what types of customers that he could potentially be pitching to as part of the program.
Okay, that's a little bit of a tricky question, because it really, I'm sure that you put a lot of thought into your go-to-market and who your target customers could be. I mean, lots of opportunities and channels come to mind. Retail, is it an enterprise health play? Maybe, it could be through fitness channels. I mean, there's just, a wearable like that seems like it has a lot of different use cases and a lot of different go-to-markets. So again, I think it makes the most sense for you if you've honed down kind of who you think your target customers are, If those fall into enterprise health systems, payers, big pharma, one could even envision maybe there's a big pharma partnership here. If those are sort of in your basket of target customers, then our program probably makes sense. If you're thinking it's more of a retail play, direct to consumer, then probably not so much.
Next question from Steven. Can you talk about what startups gain from the customer sprint and success cases of startups that go through the program? And his question is, what % of the cohort gets contracts or pilots during the sprint process?
Yeah, it's a good question. Thanks. So it is a little hard for us to quantify that because, as you know, the sales cycles particularly in enterprise health, are long, 12 to 24 months. And our program is 14 weeks. So what I can tell you is there are countless anecdotal examples of companies that got sales and contracts in that 6 to 9 month time frame because there was a C-level executive in the room who liked the platform and said, I want to move forward with this. As I'm sure you know, it could take you weeks or months to even figure out who the right decision maker is in an enterprise healthcare system. So we are slicing, excuse me, a lot of that time off up front. We like to say we line them up and you shoot them down. Our commitment is that we will get you in the room with the right decision makers. From that point, the ball is really in your court to get those sales closed. I can tell you that most of our teams land at least a couple contracts from the customer sprint process.
All right. So Anthony has a question. Biotech overall is not what Dreamit is looking for. Question. We're currently in the process of initiating clinical efficacy trials. As a company working on therapeutics, would that mean that we qualify or do not qualify for the program?
Yeah. So if it's a straight therapeutics play, traditional, the new compound discovery or therapeutics, that really isn't a fit for Dreamit. Quite simply, those companies tend to be very capitally intensive. So it's just not a fit with our model where we're typically investing $500,000 into a company. I didn't mention, but we do reserve another $500,000. So it wouldn't be unusual for us to put $1 million into a company. If there's a heavy data analysis platform that is a companion to the therapeutic, then you could very well be a fit for Dreamit.
And can you go into a little bit more depth about how the customer sprint process works? Do startups get a shopping list for the customer sprint? And do you coordinate with these partners on what they're looking for before the sprint?
Yes, very good question. So the answer to that is yes, we do. Our whole program is very individualized and curated. So for example, on my slide deck, you saw the logo for, let's pick one of our good partners. We'll say Intermountain Health or Baycare. We share your information ahead of time. We work very hard to get your one-pagers very tight and very crisp, and then we create a cohort summary that we send to our contacts at those institutions. Before the customer sprints, we follow up with those contacts and identify who the decision makers are within those institutions. Now, we also encourage the companies to identify targets within those institutions. So if you come to us and say, hey, for example, we have a cancer platform. We really want the chief of oncology either in the room or to get a meeting with that person before the customer sprint. Not always, but a very high percentage of the time, through our network and relationships, we can facilitate those types of meetings. Again, what's important to realize about our program is it's very individualized and curated. We work very closely with you before customer sprints, before investor sprints, to figure out who the right targets are and what the best approach is to get to those targets.
All right. Stephen is asking, how does Dreamit help leverage the technology of his startup with pre-identified strategic partners, i.e. software or hardware companies? I think we'll need a little bit more information on that question. There's just so many different ways we could potentially help depending on what your product is. So if you want to expand on that. And then his follow-up question is, what percentage of your cohort companies have applied more than once?
That's a good question. I actually don't know the percentages. If I were to just take a guess, I would say maybe a fifth of them, maybe a quarter, have applied more than once.
And a few of the startups are asking if they can get a phone call or have a further conversation. Adam, do you want to put up the last slide of the presentation just so that to make sure everyone has our contact information and email addresses?
Sure. Yeah, I'll put that slide back up. What I encourage you to do, can you see that okay?
Yep, looks good.
Yeah, so what I encourage folks to do is, one, fill out the application. It's really a pretty light lift. In there, attach your pitch deck, and then send an email to both Ethan and myself letting us know, hey, we heard you on the webinar. We're interested in Dreamit. We submitted the application. If you want to attach your one pager or your pitch deck to that email, that's great. We'll review it, and then we'll circle back if it looks like there's a fit, and find time. I didn't really get into our process, but so very briefly, process is pretty simple. Company applies, we review the application, we set up a short follow-up call with Ethan and myself, maybe a 45-minute call. We may do a little bit of light due diligence after that. And then if you're still interested and we think you're a fit for Dreamit, we then move you to a final round interview with the partners from our investment team. And then after that, we typically do a little bit of additional due diligence and then proceed with an offer if it looks like you're a fit.
Awesome. Great. And maybe if you could just talk a little bit about the investor sprint process. Like what VCs are startups meeting with? Are they all meeting with the same VCs? And what are some of the results from the VC roadshow?
Sure. I think take the last question first. The statistic that's most important to you is, does it work, right? Are our deals getting done? And the answer is yes. Over half of our companies are closing an institutional round within 6 months of completing the Dreamit program. And at the risk of being a little repetitive, every part of our program is very individualized and curated. That includes the investor sprints. So the answer is no, not every company goes to every investor. We reach out to nearly 1,000 venture funds. So what typically happens is every fund, as you know, has a slightly different investment thesis. They're looking at companies at different stages, different levels of capital that they're raising, different segments. Venture Fund A will typically look at our cohort and say, you know what, those 2 companies fit our thesis. When you're in San Francisco, those are the 2 that I want to talk to. Unfortunately, the other 7, just not really a fit. So we have a platform team that works very hard to coordinate. It's a linear programming model when it's live in terms of moving all the teams to all the right places in real time. But we will do our best to match you to those funds that are the ones that fit your stage and the size of your raise.
And do we connect startups to angel investors as well?
We do on occasion when we take in companies on the earlier side, which is not really our strike zone, but it does seem like every cohort we end up with maybe 1 or 2 companies at the most that are still at that angel stage. And in those cases, we do have a network of angel investors that we will put those companies in front of.
And in terms of the areas of med tech and digital health and diagnostics that are oversaturated, maybe that you see way too many startups. Maybe there are leaders in the field that make it hard to compete. One of the attendees asked about telehealth in particular, but could you talk a little bit about areas that you think may be oversaturated, or that it would be a little bit difficult to bring into the program?
Yeah, I mean, I would really say I would encourage everybody to apply. We don't really take that view of the world. Some venture funds do. Some venture funds say, hey, you know what? We're just not doing another patient engagement platform. Don't even bother emailing or calling. We're kind of done with that. That's not really how we view the world. They're particularly on the digital health side. It's a very crowded space already. No matter what platform you have, in all likelihood, there are 10 to 20 other lookalike companies doing something very similar. So we don't screen out by saying, geez, we're just not going to do one. That space is too crowded. We will screen out if you are a direct competitor to a company that we've already invested in. So sometimes that line can be a little bit fuzzy, and in those circumstances, we will check with the existing company, and then we'll check back with your company to make sure that neither company sees a conflict. The short answer to that question is, if you think Dreamit can add value to your company, just go ahead and apply. The application really is a light lift.
And if a startup makes it through the interview process, what references do you typically look for? Do you talk to customers, or do you do calls with other investors?
Yeah, it's very company dependent, but our due diligence process is not all that different from any investor's traditional due diligence process. So it tends to be a lighter version of that. But yes, we are. It is not unusual for us to have some phone calls with your existing investors, your existing customers, or other related stakeholders.
And in terms of traction required to get into the program, is there a certain threshold or milestone that you look for as a baseline to get in?
Yeah, very good question. So, traction, like beauty, is in the eye of the beholder. So there is no hard threshold. If you don't have X dollars of MRR, we're just not interested. We're looking for signals that you're beyond product market fit and that you are ready to scale. So, there's debate in the digital health community, paid pilots versus unpaid pilots. We don't really get hung up on that. We're looking for a signal from the market that your platform is ready to scale. That means you have referenceable customers who love your product. If you have that, then there's a good chance you have enough traction for us to get excited about your company.
And this a similar vein with the question, what about market size? Is there any market size threshold?
Yeah, excuse me. So we do look for large venture backable markets. Again, we don't put a hard number on that. We're really backing into that from, is the market big enough for us to get a venture level return, for any venture investor to get a venture level return? So while there are no hard cutoffs, it's certainly true that your market size, you must have a market size in the hundreds of millions of dollars for that to be kind of defendable as an investment to an institutional investor.
Great. I think that is all the questions. Any final questions that you guys want to shoot over to us before we finish up? Looks like that's it. Just as a reminder, oh wait, we have one coming in. Would you be able to move quickly back over to the financial offer slide? Yeah, we can definitely do that. And all of these answers should be on the FAQ page, dreamit.com/FAQ. It has details about the financial offer, all of the key dates to the program, and a bunch of other questions as well. Do we invest in cannabis companies?
So the answer is we haven't, but it doesn't mean we wouldn't. Again, it really depends on the go-to-market. If that's a direct-to-consumer play, probably not an ideal fit for Dreamit. If you're selling to payers and providers, then yes, we would look at it.
Awesome. Great. I think that is pretty much it. If you have any final thoughts, Adam, the only other thing I would add is everyone should visit the dreamit.com/healthtech program page. There's the full list of our customer sprint partners. So you can go in and see all of the hospital systems, insurance companies, medical device companies, and other companies that we work with that you would be pitching to on the investor sprint. And I will throw it over to you, Adam, to give a final closing thought.
Yeah, thanks so much for taking time to learn more about the Dreamit program. Don't hesitate to shoot Ethan or me an email. And again, if you're in doubt, fill out the application. If the timing just isn't right this cohort, it might be the next one. So for us, it's all about getting to know companies. It's a business development process. It's like any relationship. The longer we get to know you, the longer we know you, the better we get to know you. Please go ahead and fill out the application and do it sooner rather than later. While the August 3rd is technically the cutoff, there sometimes is some back and forth. Sometimes you need to get input from your investors, even after we made a formal offer to you. But there's a few iterations and processes back and forth. So given that the program is starting in early September, there really isn't a lot of time between now and then. So if you're interested in Dreamit, just go ahead and fill out the application.
Awesome. Thank you, Adam. Thank you, Ethan. And looking forward to talking to all of the founders very soon. Good luck in the application process.